Good afternoon and good evening to a few of you. Welcome to today's community briefing. I always have to look and check on the date. January is just flying by. So it is the 26th of January. Just 5 more days left, and then February will be here. So it just seems not too long ago, it was New Year's Eve, the beginning of the year. So we're glad you're here. My name is Gregory Sneed, and this is the community briefing. Our guest today is Miss Betty Rudolph, and she'll be sharing us information with her role at the FDIC, and we'll find out what that is and what they do. So I am glad you guys are here. My name is Gregory Sneed. The name of my company is Lifesaver Financial Services. I help my clients with life insurance solutions, financial coaching, and financial literacy training, because I firmly believe that when you feel better about your money, you feel better about your life. Welcome, everybody coming in. And now, without further delay, I want to welcome to our virtual stage the Queen. Yeah, she's also a queen, Betty, among other things. The Queen of our community briefing, Miss Crystal Mitchell.
Hello, everyone. Welcome to another week of great information. We have a fantastic guest, and we're excited hailing all the way from Washington, D.C., the hub of our country. So we want to welcome her. We have Miss Colette Moore. Hey, Colette, and Derek and Tracy, and I'm sure more of you will be coming in. My name is Crystal Mitchell. Excuse me. And I'm the co-director of Recycling Black Dollars. The community briefing was inspired by me to make sure during the pandemic that we got our information firsthand as a business coach and stakeholder in the community. That's one of the things that I recognize is that we don't always get information in a timely manner so that we can act on it and make better decisions for our business. So that was why it was inspired. That was the inspiration behind it. And then we just realized how valuable it was to the community. So we kept it going. So we're in our third year now. March will be our third year. So I'm happy to be here. In addition to co-directing Recycling Black Dollars, I am also a business coach. I provide business tools and resources and mentorship to the small business community to make sure you're bank loan ready, business ready, and contract ready. I host another podcast called The Business Zone with Crystal and Gilbert, which is on every Friday afternoon. You guys got to tune in February. We're doing a whole month on Black History Month. And then in March, we're going to highlight all our women. So women in business. So you want to check us out. This platform is powered and sponsored by Recycling Black Dollars and the Black Business Association, as well as financially sponsored by Edison, Southern California Edison, Wells Fargo, and PCR. So we want to make sure you guys know that we do require support to keep us going. So if you want to support us with some donations, we are always appreciative of that. And now go over to our YouTube channel, the Community Business Briefing, and subscribe. We're trying to get to our 1,000 subscribers so we can start to monetize the channel. So with that, I'm going to turn it back over to Greg. Stephen disappeared. But we have, before I get to Greg, we have a great team. Mr. Gregory Sneed, who's our moderator, myself, Stephen Turner, who's our producer, and Miss Robin Billups. And today she's going through some health stuff. So she will be back with us soon. So with that, Greg, now I'll turn it back to you.
Fantastic. Yeah, I was just about to bring up, Stephen. He was there. He's in the airport. I think it was on his way back here. So okay. When his cell phone connectivity allows, he'll pop back in. If not, we'll catch him and he'll catch the show on the recording. And then, yes, our prayers and thoughts are with Robin as she is battling with some health challenges, and we wish her all the best. Today, we have Miss Betty Rudolph, and she is the Director of Office of Minority and Community Development Banking with the Federal Deposit Insurance Corporation, the FDIC. And we'll learn all about what they do and how they protect our money up to a limit, right? And we'll talk about that. So as some of you know, sometimes I go from the beginning to the end and the end to the beginning. So I'll start with the beginning today. So Betty grew up in Ann Arbor, Michigan. She went to Pioneer High School. She then went to Kalamazoo College. I always thought Kalamazoo was like a musical instrument or something. That's a kazoo, right? Kalamazoo. And that is also in Michigan. She got her Bachelor's of Arts in Political Science and Spanish. She then also continuing her education at the University of Texas in Austin with the LBJ School of Public Affairs and got a Master's of Public Administration and also in International Trade and Economic Development with a specialty, I guess, in Latin America. And she has also gotten a diploma, a Graduate School of Banking at Wharton Leadership with the ABA Stoner Graduate School of Banking. She started her career with the U.S. Department of State, and then she was a fellow at the Executive Office of the President of the White House, right? Presidential Management Fellow. She was with the OMB. Everybody know what the OMB is? The Office of Management and Budget for the U.S. government there. And then for the last 32 years, she's been with the FDIC in a number of capacities. Policy analyst, assistant director, resolutions and receivership, assistant to the CFO and deputy chairman, strategic planning and resource management. She was associate chief learning officer, and I had to look up chief learning officer and kind of what they do. And it's interesting because one of the skills of, I guess, or responsibilities of a chief learning officer is change management, and I can imagine how tough that might be in a governmental organization because they seem to be how's the word I'm looking for, challenged with change, right? Because they get used to things. Assistant Director of Operations and Special Projects, and now currently her position is she's the Director of Office of Minority and Community Development Banking. So please welcome to the virtual stage, Miss Betty Rudolph.
Well, thank you so much, Gregory and Crystal. I really appreciate the opportunity to speak with you all today. And I'm going to tell you a little bit about our work in supporting Minority Depository Institutions, or MDIs. And we're going to talk a little bit about what are MDIs, why do they matter, and then what our role is working with Minority Depository Institutions. So just to get started, Minority Depository Institutions, the FDIC insures about 145 of these banks. They have about 329 billion in total assets. They're a very small number of the total number of FDIC insured institutions, which is about 5,700, but they play a really important role in the 29 states where they're located: Guam, Puerto Rico, and the District of Columbia. And on this slide, I included a map of where they're located. This map also includes community development financial institutions that the FDIC insures. So these are commercial banks and savings associations that we insure, not credit unions and not nonprofit loan funds. So they're both shown on this map, and our office really works to preserve and promote MDIs and CDFIs that we insure. And I'm going to talk mostly today about MDIs.
Betty, can I interject for a moment?
Sure.
We had your screen share on before the show started, and we took it down. So you'll need to go to share screen to relaunch it so that we can see that.
Okay. Let me see if I can do that.
All right.
Sorry about that.
Good luck. We're counting on you. We know you can do it. So the little green button right down in the middle of the. It looks like you got it.
All right. Can you see it now? And is it in slideshow mode?
It's not in slideshow mode, so you'll have to bring it over to from beginning, and then.
Can you see it now?
It's coming.
Click. There you go.
There it is.
Okay, terrific. Well, thank you for letting me know that. And this is the map. Oh, these are the topics I mentioned. And then here's the map I was describing that show the 145 FDIC insured MDIs, as well as approximately 178 FDIC insured CDFIs. We're going to limit our conversation today about MDIs, though.
You mind if I interject one more time?
Sure.
Up at the top there, it says display settings on the screen there, and you want to do a drop down and do swap. There you go.
Thank you. All right, let's move on to the next slide. So what are minority depository institutions? So we at the FDIC define it as any federally insured depository institution where 51% of the voting stock is owned by minority individuals, or a majority of the board of directors is minority, and the community that the institution serves is predominantly minority. So as I mentioned earlier, these are commercial banks and savings associations. So we're not talking today about minority depository institution credit unions or minority CDFI institutions that are nonprofits. These are exclusively FDIC insured institutions. So, I told you there were 145 in total. On the right-hand side there, you can see the number of African-American MDIs is 20, Hispanic 30, Asian Pacific Islander 73, about half the population, 20 Native American, and 2 multiracial institutions for a total of 145. And, why do these institutions matter? The FDIC conducted a major research study in 2019 that talked about the structure of the MDI industry, their financial performance, and their social impact. And this slide is drawn from the social impact chapter, and it shows that the median share of what we call the estimated service population. So if we drew a circle around where a bank is located, what does that population look like? And so the percentage living in low and moderate income census tracts is much higher. MDIs really reach low and moderate income communities at much higher rates than other banks. So on this slide, you can see there on the left-hand bar there, African-American MDIs in 2011 and 2016 successively served 78 and 69%, of their service area population was in low and moderate income communities. Hispanic, you can see the bar there. Asian American is the next set of bars. And then towards the right there, non-MDI community banks that are comparable to MDIs, those percentages were only 16 and 21%. And then when we talk about non-MDI, non-community banks, those are like the large banks. So for the large banks, their service areas included 19 and 26% of low and moderate income communities. So you can see that these institutions are reaching people that might not otherwise have access to a bank account in many cases. The next slide also shows from our study sort of the service population for African-American MDIs. And so if you look on the left there is 2011 and on the right is 2016, it's the same trend. African-American MDIs, 72% of their population 2011 was in was African Americans, and for comparable community banks it was 4%, and comparable large banks 5%. And then same trend in 2016, 62% of African American MDIs of their customers were African American, compared to 5% for community banks and 6% for the large banks. So many of these institutions were organized to create a pathway to a bank account. And some of these banks have been around for 120 years. Others are newly formed to serve immigrant populations. But we like to say that these institutions really punch above their weight in serving communities that might not otherwise have access to the banking system. So this chart has a lot of numbers, but I wanted to draw you into a few of them. On the left-hand side, that big box there is it's the asset side of a balance sheet for MDIs, and on the right-hand side is the liability side. So banks make their assets are loans they make to their community. And what I wanted to point out about this slide is that if you look in the second column there under MDIs, the percentage of their assets, surprisingly, they're only making about 18% of their loans are mortgage loans. By far, the vast majority is commercial real estate loans. They're at 34%, and they also make about 11% commercial and industrial loans. And so for a total of about 71% of their assets are lending to the community in mortgages, commercial real estate, and commercial and industrial. And then we have comparisons there between what community banks do. MDIs are similar to community banks, and then what non-community banks do. So moving on to the right-hand side of this slide, this is the liability structure of the bank, or how they get their funding in order to make the loans. So you can see that core deposits there, 77% of the loans or assets that MDIs have are funded by core deposits that they gather in their communities. And that's pretty comparable. You can see there to community banks, about 79% of the loans that they make, or the percentage of their assets, are from core deposits in their community, which is much higher than the large banks there on the right-hand side. So these institutions really matter in their communities. The other thing I wanted to point out, I'm sorry I didn't on the left-hand side there, consumer loans is the second line down below mortgage loans, that these institutions are mostly, involved in commercial real estate. Only 4% of their loans are actual consumer loans. That's consistent with community banks, but much lower than large banks, which have 11% of their portfolio in consumer loans. So what is our role? We are a bank insurer, so we have a very large insurance fund that we use. And so when a bank fails, depositors are guaranteed up to $250,000 per insured account in their bank. It's been a really important role, particularly during banking crises, and provides stability and public confidence for people that have money deposited in banks to know that their money is safe. So we do insure all 145 of these banks. We also wear a regulatory hat. So we supervise and regulate 97 of the 145 MDIs, or 2/3 of them. The other supervisors of the remaining MDIs that we insure are the Office of Comptroller of the Currency, which is part of the Treasury, and the Federal Reserve. So we audit these institutions, we examine them, we go into them periodically, make sure they're, everything's going well, because we want to protect the deposit insurance fund and help prevent failure where we can. And then we wear a third hat, and this is really where my office comes in. The FDIC works to fulfill 5 statutory goals to preserve and promote minority depository institutions. So Congress in 1989 passed a law called the Financial Institutions Reform, Recovery, and Enforcement Act, and it established 5 goals for us. So first, to preserve the number of these banks, to preserve their minority character when they merge or are acquired. So the goal there is to try to keep the minority character of the institution in that community. Third is to provide technical assistance to help prevent insolvency of these institutions. Fourth, to promote and encourage creation of new MDIs. And finally, to provide training, technical assistance, and educational programs for MDIs. So we've been doing this work even before the law passed in 1989. And a lot of our traditional initiatives in this area were outreach. So our regional directors and our senior management reaching out, working with these institutions, understanding their challenges and their opportunities, doing some education and training. We hold roundtables and talk about regulatory hot topics with these institutions periodically. And then technical assistance. So we offer on demand, and a minority depository institution can say, I'd really like some help in implementing a new product that's part of our strategic plan, and can you take a look at it and give us some feedback on that? And so we do a lot of technical assistance for these institutions. I think last year we did around 140 instances for the 97 banks that we supervise. More recently, we've been doing a lot more sort of, I'm going to say on steroids, our efforts to preserve and promote these institutions. Part of this is we had an opportunity starting in 2020 with the murder of George Floyd and the national conversation on race and equity coming out of that. Actually, before that, we sponsored some what we call speed dating sessions between large banks and MDI CEOs, where we brought larger institutions into the room with MDIs to look for partnerships where they could share either financial assistance, technical assistance, providing human resource advice or IT advice, all kinds of things. And we did that in 2019 prior to the pandemic. It was very successful. And then, we would provide lunch and breakfast and encourage conversations and share information between the banks ahead of time. Very successful. The pandemic hit. We were not able to do that in person. But we did really make an effort to hear about what are the challenges and opportunities in these banks. And our chairman created an MDI advisory committee. It's a subcommittee to our advisory committee on community banking as a channel for understanding challenges and opportunities from these institutions, helping them have a voice at the table and input into policy initiatives. And we use it to showcase all of the good work these institutions are doing in their community. There are a lot of things on here. I'm just going to talk about a few of them. We have a statement of policy our board adopted that lays out how we do our program, how we conduct our program. A lot of our work is in supervising these banks, making sure they stay healthy. And so we look at their unique business models. As I mentioned, many of these institutions serve lower income communities. And so as the examiner looks at earnings or other types of aspects of the bank, we want them to understand the unique business models of these banks and take that into consideration as they're applying the examination standards. So we updated our statement of policy recently. That had been our policy, but was just not included in that. We updated our failing bank procedures. So if an MDI were failing, we offer I'll call a first look window of 2 weeks to have any eligible MDI purchasers take a look at sort of the books and records of the failing institution, talk about the transaction where the FDIC sort of arranges the resolution of the institution if it is to fail. And that really helps us meet our goal to keep the minority character of those institutions. We've only had one MDI fail since we did that. It was a Black bank in Newark, New Jersey, and another Black bank, industrial bank here in Washington, D.C. was the winning bidder. And they have credited sort of this new program as very helpful to them in constructing their bid. We're working on cultural change within our agency overall on financial inclusion, and we're particularly doing that in our MDI program. On the right-hand column there, I'm going to talk about the mission-driven bank fund. So thinking out of the box, our former chairman asked us to think about using our platform to convene and our platform to speak out as a government agency to talk about the really important needs of these MDIs. Traditionally have not had access to the capital markets to the extent of other banks might have. And so we spoke out that there's a need to invest in capital in these institutions and provide other funding and other types of support. And the mission-driven bank fund, we engaged a couple of private sector investors in that. It is a private sector fund. It's not FDIC run, but we sort of championed the need for the fund, and 2 anchor investors recently hired a fund manager that was announced on December 15th, and the fund will be working to provide needed support to MDIs, and CDFI banks are also eligible for that. The federal government responded in 2020 to the pandemic and recognized that minority communities and low and moderate income communities were hit especially hard from the pandemic. So the Treasury Department was appropriated $12 billion. There's $9 billion there for a program called Emergency Capital Investment Program, where the Treasury has bought equity in MDIs and CDFIs. And the CDFI fund was awarded $3 billion in grant money to award to these mission-driven banks that were hit especially hard from the pandemic. The other thing we try to do is really champion sort of the positive stories of what these banks are doing in their communities. So I'll just highlight, we've developed some origin story videos for a couple of these banks and a Banking on Inclusion podcast, which you can find on our website. And with that, I will move to my last slide, which is some sort of additional resources. If you're interested, our main external webpage is listed there at the top. A link to our statement of policy. And I know some of the listeners on your call might be businesses that might be interested in getting some capital from some of these institutions. So we've included the list of our MDIs and an interactive map of the MDI and CDFI headquarter branches, which I showed on an earlier slide. And I included a link to our research study there as well. Before we turn to the Q&A, I just wanted to offer up one other sort of anecdote, which is I understand there's some people on the call from City First Bank, which used to be City First Bank of DC and merged with Broadway Federal in Los Angeles a couple of years ago. And the reason I'm here today as the director of this program, I will largely credit to City First Bank. I saw a presentation that Brian Argrett, City First CEO, gave back in 2012 at a conference, and it showed Washington, DC, and where City First is collecting their deposits and where they're making their loans. And it was largely in Northeast and Southeast Washington, DC, where I personally spent a lot of time in the 1980s and 1990s volunteering, doing mentoring work, working for nonprofits that were creating college scholarships for at-risk youth. And, I've lived in Washington, DC now for 37 plus years, and it's a fairly divided city. And I could see that taking the bus from my house over to the young woman I was mentoring. And when I saw this presentation by City First Bank of the work they're doing in the community, I thought the power of finance to lift up a community where there's limited hope and limited resources was just really powerful for me. And so I went back to school in my early 50s to take more financial classes and banking classes just to get into graduate school of banking so that I could do this work. And it's the thrill of my lifetime to have the end of my public service be in doing this work that I care so deeply about, and with the institutions that are doing this important work in their communities. So I'll pause there and turn it back over to our moderator.
Yes. While you have that page up, if you could send us the resources, but I would suggest for those of you, if you want to take a screenshot, if you know how to do the snip and save, or get your cell phone and grab a picture of it, and then we'll see if we can get the links. I tried to copy it from the slide to put it in the chat, and I wasn't able to.
Okay, sorry about that.
So, yeah, no worries, no worries. So just if you there's some good resources there and information. So if you want to take a moment and do a snip, if you know how to do a snip or a picture.
I'm going to put in the chat a shortcut, which is FDIC.gov, and /MDI. All of those resources stem from that www. I put a slash there. Sorry about that.
Yeah, somebody put it in there. Okay, cool. Thank you, Cynthia.
Perfect.
All right, so let's take the screen share down, and what we'll do is, Crystal, if you do a scan, I didn't see any questions. We'll first load your questions in the chat. We'll take those first. Then we'll do a hand raise if we have time to grab questions. I had a couple of questions. One is, can you give us a sort of a 2-minute recap on the ECIP program?
Sure.
Yeah. Mm-hmm.
Yeah, that would be great. So in December of 2020, Congress passed a massive appropriations bill for fiscal year 2021, and included in that was $9 billion that was authorized and appropriated for the Department of the Treasury to invest in eligible minority depository institutions and CDFIs. And that in that bill, it also included MDI and CDFI credit unions as well. not loan funds, but credit unions and banks that are MDIs and CDFIs. And so they filled out an application, and what they had to include was a lending plan for how they're going to make an impact in their community. It had to be low and moderate income. They had to show the track record of the work they've already done in that community, and then have a plan for the work they were going to do. And in turn, of that $9 billion, Treasury has wired $8.3 billion to approximately, I want to say, 160 plus institutions. And it's for, they're buying preferred stock in most institutions, except for S corporations where it's subordinated debt. And so this is a game changer. It, some institutions, let's just take a $300 million bank that had, let's say, 10% capital of 30 billion. They might have gotten $80 million of new capital from Treasury. And if you get, let's just say you got $10 million more in new capital, you can leverage that 10 times up to $100 million in making new loans in the community. And the way Treasury set the interest rate for the banks is such that the more deep impact lending they're doing, the lower the interest rate that the bank is paying on that, the lower the return on that stock investment.
Got it. And you mentioned something very powerful, that the power of the bank to be able to lift up a community, and that is in contrast to the powers of banks that suppressed the communities years ago through discriminatory practices and lending and redlining and a number of issues. So it's good to see some progress going there. I had one question to ask in terms of, I know one of the roles of the FDIC, maybe a little bit out of your area, what you touched on it, is bank failures. Mm-hmm. And I was looking at the history of bank failures, and they were pretty low. 2001, it was 4, 2005, 2006, it was 0, then 3, and then 2008, 2009. No surprise, it jumped to 25, and then 140. It looks like it peaked in 2010 at 157, and now it has dropped down to 0. What's missing maybe are the banks that might have been close to that failure, where either the FDIC or programs step in to kind of help that out. And where do you see that going? I mean, we see maybe a recession's coming. Are bank failures going to, are they on the weather forecast, or what's happening there?
Yeah, that's a great question. We have something called the problem bank list, where we sort of have a watch list of institutions that we're, having heightened supervisory strategies with. And we have, our supervisors have corrective programs to help these institutions, with what they might need to do to return to health. And in the case of MDIs in particular, what we have is this technical assistance, which can be very powerful. But we have this problem bank list, and I think the total numbers on that on that list and the asset size are included in a public publication that we put out quarterly called the Quarterly Banking Profile. And I think those numbers are kind of at the lowest level they've been maybe ever currently. And you talk about what's on the horizon. Of course, none of us know. You read the paper and you see, interest rates are going up, and, are we on the verge of a recession? I don't know. I can't comment on that. That's for economists to debate. But we do know that banks have much more capital now. They are much better capitalized going into any potential headwinds that they might encounter. And so Congress kind of stepped in at the end of the last crisis and made some changes. And so I think those have been positive steps. In addition, I mentioned ESIP. There's also hundreds of millions of dollars that large banks have invested in MDIs, primarily in the African-American MDIs, and other partnerships where larger banks are providing deposits and liquidity to help deploy that capital that they got from ESIP, lending sort of human resources to these institutions. And so I think a lot of the banks, have a lot more resources compared to going into 2008 and 2009 into that crisis.
Right. And I'm going to turn it over to Crystal, but one last thing. Did you bring any samples for us today to hand out?
You mean like samples of money? Yeah, right.
Yeah. You got a few to
virtually hand them out.
Yeah.
Betty, recycling black dollars. I'm sorry, Greg, are you?
No, I was going to it's balls in your court. Over to you.
Okay. Recycling black dollars in 1996, we were founded in 1988, and the founder, Muhammad Nazruddin, was really about the power of uplifting the Black community and making sure our dollars recycled and that we were supporting our own. So he implemented a Change Bank Day. And so the goal was to move 25% of the Black communities' savings into Black business banks. And so Broadway Federal at that time was one of those banks that he chose. And I think Founders has since is no longer with us, but Broadway Federal obviously is. And so we moved over his goal was 9 billion. He moved over 4 billion. We were able to achieve that. And a lot of the depositors that are there now are from that time frame. I moved my bank over there, and so it was a powerful move. I love Broadway Federal because everybody knows my name, and they are just exceptional. No matter where I am in this country or in the world, I can put a call into them and they know who I am. I'm not just a number. I'm actually one of their customers. And so I don't know about the rest of you guys, but I feel very confident with my money. But that was something Recycling Black Dollars did in the early days. So it was a powerful move. And that you could go in and the people would look like you. There was a question of the 145 MDIs, how many of them are Black led?
Yeah, that's a great question. 20 of them are right now. And, I'll just give you a little bit of history. I think the data that we keep in our research study, you can look at it online. At the beginning of our study, there were 48 Black banks, and today there are 20. It did go down to 19. We had a mutual institution that has a new board of directors that's more than 50% Black, and they're serving a minority community in Philadelphia. And we're expecting a new Black bank to open any day now as well. So the number is gradually going back up. But a lot of what happened there, I think Gregory mentioned failures. I think 13 of them failed, a lot around the time of the crisis in 2008, 2009. But, most of them merged with other MDIs and many of them with other Black MDIs. So Liberty Bank in New Orleans, for example, I think, has merged with a number of Black banks on an open bank basis. Their most recent acquisition was Tri-State Bank in Memphis, Tennessee. And they also, purchased through the FDIC receivership process some failed Black MDIs. And so as a result, they've expanded to, I believe it's 9 states or 11 states through that process. And they've grown bigger, similar to City First and Broadway merger, 2 institutions combining, maybe one less charter, but, a much larger institution. And a lot of the pressure on MDIs as well as community banks has been, about economies of scale. If I'm, spreading all of my overhead costs across a small revenue base, my costs are going to be a lot higher than if I can spread them across a much larger footprint. And so there have been, not just in MDIs and Black MDIs as well, but in community banks in general, there's been a big consolidation. I'll say I started my career in the federal government in 1985. There were 18,000 plus commercial banks and savings associations, and there around 5,700 today. And a lot of that is sort of, economic decisions, business decisions that those institutions make.
Awesome. Awesome. Cynthia is here from City First Bank. Cynthia, would you like to say something?
Yeah, no, thank you for inviting us to join. Betty, I feel like we met in 2012. May have been the same presentation. It was capacity building that FDIC supported for CDFI MDIs. That's actually how I met City First and how I met Brian, and how I personally fell in love with everything MDIs have been doing for over 100 years. So I'm the chief of staff for CEO Brian Regret, and just everything Betty said has been benefiting us. It really is a different time than 10 years ago for Black-led MDIs. It's really amazing to see the sector in a space and opportunity to thrive with enough partnerships. There's good partnership opportunities, but there is a lot more. I was just advocating the other day that we're over $1 billion in assets now, and with the Emergency Capital Investment Program funding, that was $150 million of core capital to the bank, which allows us the capacity to at minimum double the size of the bank, which is amazing. And so that was pre-merger. So City First Bank, I came from I'm in Washington, D.C. and came from City First Bank before the merger with Broadway Federal Bank. I helped lead the merger. It was an amazing merger of equals. If folks, it's been an honor of my career to be a part of seeing two, incredibly powerful, strong Black-led institutions come together to create an even stronger entity. So to have even more capital to do more within our, DC, Los Angeles core base, but also expand that further into other urban markets is really exciting. Our focus is commercial banking, just for those that are also looking at us as a financial institution. We do exclusively commercial lending, focused on affordable housing lending, with a particular emphasis in our direct lending for minority developers, because we see that as really important to support Black real estate wealth building. And we also do community facility financing, extensive with the social services organizations as they tap into real estate as a wealth building tool for their community goods and services. And then also a smaller amount of direct small business lending. We're trying to do more of that, but our core has been commercial real estate. And so yeah, we're trying to do as much as we can, but we also, like any business, you gotta focus on what you're good at and try to expand that, and then figure out pathways to do more of other good things. But I'm happy to answer any questions folks have. I'm at City First Bank, but I've been exposed and to all of the Black-led MDIs. So I'm, so if you're in certain markets, like, happy to.
Okay.
I'd love to.
Might be in
I have a
yours.
question.
Yes, Ted.
Well, I'm the business development and grants manager for my institute. We're a progressive nonprofit that's really growing, and I'm moving us to get into the permanent housing market. And I'm particularly interested in making sure that the institution that we bank with, that they support the things that we do. And so we currently bank with Chase. However, and this year we're planning to open because we're moving to become a national organization. We're opening an office in Chicago and in Houston. But here, I'm definitely pushing for us to be able to get into the permanent housing market, because we do a lot of housing. We have a number of housing programs, but we support like permanent housing, but we don't actually own anything yet. That's our next move. But I am interested in making sure that we have a good relationship with our banking institutions. So our CEO, I'll be having some conversation around how we're supporting the things that we're moving, and I'm not sure I'm happy with where we are. And I'll see this year how we're being supported, because I will move for us to change who our banking is, because we're growing rapidly. And so we're like about a $6 million budget right now, but that's going to grow tremendously. In the next few years.
Well, we with the growth that just speaking selfishly of the City First Bank, and honestly, any of the MDIs, I would say a year ago it was a different story, but we are like actively looking for new deposit customers, and those that are mission aligned, or, the ones that we're most excited about. Because
we're unapologetically Black, and we're moving forward with.
I obviously am not Black, but we are unapologetically
our agency is
proud of
our agency is
the fact that we're Black led, and I'm unapologetically proud of that. Yeah.
And I will say something, Ted and Cynthia, when Delcine, who is the branch manager over at City First in Inglewood, when she came back from DC after the meetings, she was so impressed with how they put a focus on Black businesses and making sure, they literally handheld them through the process to make sure that there was a positive approval rate. She was just blown away, because she said they didn't do that here in California. And so, I assume the whole idea was to bring the philosophies over here. And so she was very impressed. I say go over and have a conversation with them so you can feel comfortable with them.
Yeah, thanks, Crystal. Nothing better than a customer.
I've been there for RBD has been there for 27 years, and I've been there for 20 years. And so I've been very pleased from all aspects. And Mohammed Nazardine wouldn't have made that move when they were Broadway Federal. And I've seen, and I've had conversations ever since the beginning of the merge, because they actually reached out to me, and we had a conversation, being that our relationship with them. So, but you still have to make your own decision. So before that, Sharon, you wanted it, and Sharon is the Miss Banker lady here in Los Angeles, man. So
I am not a banker, former retired. Retired. Thank you so much, Crystal and guys, for putting this on. I am so glad to see you, Betty, and it's a pleasure to meet you, Cynthia. I've been in this game we started BRG 23 years ago, at the insistence of one of my mentors, who was also the mentor of Brian Argett. We grew up together at the knee of Bob Kemp, who started Fulcrum. And so as institutional, we champion Black investment, we champion Black finance. We grew up with that mantra, and both our careers spun from that. So one I'm extremely excited about. I've served as an advisor to the MBDA and on OCC's MDI committee. But am interested, I'm super excited about some of the things that you're doing at FDIC. It's very exciting to see so much capital, between the capital that was funneled into our community banks and our MDIs, and the plethora of cash flow that they experienced as a result of PPP. We have healthy balance sheets today. So what we don't have, and what I'd love to hear both of your perspectives on, is the forecast on how we use institutional relationships to elevate the presence and the value proposition of our Black and community banks. Our banks are critical to the success of our community's financial viability. All the products of suites and services need to be at our disposal. And that's one of the reasons the Black community suffered so much more heavily than others, because they didn't have those relationships. And the community banks and MDIs, they went to work. I mean, Delphine's on the call and US Bank went to work. They were running 24/7 during PPP. However, I'd like to hear some perspective on things that you, both the agency at the FDIC, as well as we see Brian, because I'll call him, are seeking to do to kind of help elevate the status of MDIs, community banks, CDFI banks. Our depository partners have to be a preferred lender. They have to be the source and viewed as a solution to support our business communities, as much as the CDFI fund and the coalition of CDFIs have done, they've made their presence known. And in many cases, they've become the preferred go-to. And that shouldn't be. They should be the last go-to, because the rate structure, the pricing structure, and the plethora of financial services and the CRA reinvestment all stands at the institutional level and not at the CDFI alternative lender level. So we need all of them in the game, but I don't think I've not seen our market respond to this segment of the banking sector in a way to prop them up and help them become the important role. Had it not been for community banks and MDIs, our minorities sectors would have completely failed. It wouldn't have been a 40% Black business failure. It would have been an 80%. And so I'd like to hear, what can we collectively do, to begin to elevate their status? And with all this money in the market, there's just crazy money on their balance sheets, but they've got to get it out. And we've got to be able to move. When we believe in them, we'll invest. We'll put our money there. Perspective. I don't know. That's a very long question, huh?
Betty
I'll
or
just
Cynthia?
I'll just start briefly and say it's a great question, and I'd love to co-create some additional ideas from people like you who are in the community there and working with businesses and others that would be partners with MDIs. But what we've tried to do is really tell the story of MDIs and really sort of talk about the impact that they have through our research, through our videos, our podcasts. And, as a government agency, we have the power to convene and we have the power to speak out. And so we've been trying to do that. And I think that, it has been great the last couple of years, sort of a community of people speaking out, not just federal agencies and large banks and community groups, but many others, and particularly on Capitol Hill. Just hearing testimony about MDIs and CDFIs, I don't know that, that was ever really a topic of interest as it's really caught fire on Capitol Hill. But I think speaking out is important. And I think that's things that business partners, business groups, chambers of commerce, and others can do. We've also tried to, we can't say, here's a business opportunity, form a new MDI, but one of the things we're excited about, we're hoping to release this year, is an interactive mapping tool to show where there are large minority communities, where there are banks, including MDIs, CDFIs, and other institutions, and hopefully show where there might be markets that have been under-resourced and could either use a branch from an existing MDI or additional web marketing, internet marketing, or perhaps even creating a de novo institution. Cynthia?
Yeah, Sharon, I love your enthusiasm. I share it. And a pleasure to meet you. So in my seat, I have led our impact management program for 6 years. And as of this year, also going to be leading our marketing efforts. So one of our values is we think big, and that is, basically, like, we acknowledge we are one institution within an ecosystem, right? There's only so much. I mean, when you're talking about this, when you're talking about systemic racism, there's only so much any one institution can do. So, that means we see our MDI peers as peers. We don't see them as competitors. We're supporting each other in the market. When we're speaking out, we're frequently speaking out for the sector, not just for ourselves. So I see, from like an institution standpoint, a lot of our efforts, something I'm incredibly passionate about is telling our story, and different ways we can tell our story. How do we identify like the impact that we're having, and how we, whether it's, and how it translates to these community impacts and theories of change that we want to have with racial and economic equity. And so getting that message out, as far and wide as we can is really critical. And I think for us too, having those value aligned partners like front and center matters most. I mean, like I was saying on a call the other day, like without CRA compliance, the big banks, they won't, maybe Betty, you were even on this call, but so like E-Trade, they stopped having CRA compliance, like they fired all their CRA people and community development people. City National Bank in LA just like got, put under fire with redlining, and they're, have a satisfactory CRA rating, so like we can't depend on those things to like move the needle, like we have to build up the MDI sector. And I would say what's been really great, and there's been a lot of progress at the federal level with, FDIC, we're OCC regulated, having the formal channels of government speak out to say how important we are. And they've said that for 20 years that MDIs are important, but continuing to say that message is really, really important. And people listen to that, the business community listens to that. I think that my skeptical side that I'm at the moment of is that, if you're injecting $9 billion of capital, which with the National Bankers Association, which is majority Black-led MDIs, but they've opened it up to others, $1 billion went to that membership. You're talking about needing 10 times that in deposits in that network. And we're in a moment of like, high deposit cost, which directly impacts the bottom lines of MDIs throughout the country. So, I mean, we could be easily getting, we had an incredibly low cost of deposit. It's still pretty low cost of deposits, but it's still many times over the cost of deposits that we had previously, which, for banking, like that's how you're able to then build your margin with the banking, the on lending into the community. And if we're trying to manage the cost of, interest rates on a community that, may not have the same cash flow as other businesses, like we don't want to be restricting capital deployment because our deposit rates are so high. So I say that because long-windedly, that $10 billion of deposits means we're just operating in the capital markets. People are rate shopping, people are like looking at, and it's also just a lot of money to go out and raise in deposits. And all of the Black-led MDIs who received the Emerging Capital Investment Program have to do that right now. And I'm just telling you, like Betty is like a champion at the FDIC, like this Economic Opportunity Coalition thing that was put together, like the commitments are just not enough. Like, if we could take that, we need like big deposits, like I'm talking like $100 million, like one time, deposit, but we also need the community to be supporting and investing and depositing. Like Ted, like we would love your business and you are not small. And so, I just say that in that there's a lot of work that needs to be done. And what I was saying to some partners was like, we're growing, which means our partnerships need to grow. And so like, I think there's this paradigm shift we're like moving in, is that which is amazing, right? Like it's like a Black-led entities. And I don't think this is just MDIs. Black-led entities are getting more investment, are growing. That means a transformative shift in the level of investments that's needed in those relationships. And so part of my work is like basically demanding of that, like not for, just like being unapologetic, especially these big corporates, we need, and I would call out like, JP Morgan Chase has actually been a really thoughtful, great partner. They're trying to really support us in a major way, but we
Cynthia,
definitely want
let
support from the
us
community.
talk because and I'm gonna jump it over to Greg in a few minutes. Let us talk, because at one point Broadway Federal, when it had its multiple locations down on Wilshire and then in the Baldwin Hills, Crenshaw district, and now with the only two, generally a City First is, and the announcement didn't really come out to the community of the change. So I think that could really rectify some of that. I think there are many businesses and Black people here that would really have no problem moving their dollars over to you. But they just don't know that you're really there. I mean,
Yeah.
So unless we make that a conscious outreach, which Recycling Black Dollars would love to do. I mean, we've done it before. So if you and I would love to have a conversation about that, we can
That
put
sounds
together
great,
a
Crystal. Thank you.
campaign that could really draw them over. Everyone knows how happy I am over there. So, but they only feel that there's one Black bank now in the Los Angeles area, and that's One United. So they
Right.
don't know, because there was never a major announcement that went out to the Black community that
Yeah.
City First Bank is has merged with. I mean, it was in the papers, but it wasn't an overall outreach. So I think we need to do that if
sounds
that's
great.
what you need from our community. And I believe that was what Robin's question was. But before we do that, I'm gonna turn it over to Greg because we're at our moment. But Cynthia, if you put your contact information and I'll reach out to you. I've actually been talking to Delcime about that, and she was trying to move it up the ladder. But if you the ladder,
On the ladder.
then
Yeah,
I'll jump
yeah.
right over
And
to
I
you.
think we're ready. We didn't want to just
Yeah.
share a little hot second for that. Like, we need the right leadership in the seat to like make that community lending
Yeah.
a reality. Like we're not gonna
Yes.
make false promises. And so, it's like everything, it can take time. And so I think this feels like the year for us to say, hey, we're
Okay, well, let's
We're
have
gonna
some
come in.
initial conversations and then
Great.
we can go from there. Greg, you had something.
Yeah, I had a couple
What-
questions, but I'll have to bypass those. We're definitely out of time. But there is a need for information, and especially on banking. And personally, prior to 3 years ago, I had no idea what a CDFI was. I knew what a CDC, and it's confusing to the general public. I don't have a background in banking, but I didn't realize until some years ago I served on a board of a credit union, and I just thought that those deposits were insured by the FDIC, but it's a different insurance agency that backs, credit unions. And to the general public, which I'm going to include myself, it's kind of confusing between commercial banks and S&Ls and CD. I mean, you start getting these alphabets together. it's like, so, Crystal, we need to put together a show, and those of you who are interested in participating in that, I think we ought to dedicate a show to just really talk about the different financial institutions, what their role is, and I think that'd be very helpful.
I love that being our second quarter summit. We have one summit with third quarter summit, and Sharon, we will be reaching out to you.
Yeah, that would be a big thing to really have that, and maybe an hour is just not enough to kind of go through that. Let me share screen. Colette did want to have us take a look. Let me move this first before I do that and share. So there are some economic opportunity grants that are being coordinated through PCR, America's SBDC, the small LA County, small and micro business and nonprofits. I will copy this and put it into the chat, but they are looking for you to sign up and be available starting in January, which is now, and those grants will be coming in February, which is right around the corner. So I'll put this in the chat, but there are some grants that they are helping to coordinate. That is it.
Okay. Robin?
Good afternoon, everyone. Of course, again, I love this subject, and Betty and Cynthia, and of course, my Sharon. We are the folks who can get this done. I've sat on a whole lot of greenlining calls here recently and been very candid about what goes on in the marketplace. I spent 30 years in banking doing affordable housing financing and commercial real estate construction financing, and moved over to supply chain inclusion, which they call supplier diversity. And so when we welcome the opportunity through the community briefing to be able to provide, to illuminate where the gaps are. These gaps can be filled. And Cynthia, you're right. The timing is right. Michael Anderson and I, which most of our audience know, are working on a project right now. And that project is to provide for sale housing for the Black and Brown community. But along with that is improving the infrastructure. Along with that is providing job shadowing and opportunities for the brokers who are in these marketplaces where these communities are being gentrified. These Black and Brown brokers and real estate agents aren't getting the business. So part of the challenge is ensuring that somebody that looks like us is actively engaged in these initiatives that they keep coming up with. The American public, the commerce, is very good at what I call check the box activity. We created an initiative and now we can check the box that is done, And so the role that I'm in right now, I have the freedom to tell what I know based on being behind the curtain in the banking industry. And so I welcome the opportunity to engage. Sharon Evans we got stripes on our back and need some grease on our elbows to keep standing up. And a lot of these people that are on the call today are the same individuals that can support and help the initiatives that we're talking about. Emma Maxey has a background in you name it. And so again, the community briefing is here to support the kinds of resources and services and information. And so again, we thank you guys who are subscribing. We need 100 folks to subscribe so that we can get our own YouTube channel. But again, it's this kind of information. Betty, thank you for accepting the invitation. Because again, folks in some of these regulatory areas, they hem and haw and they wait because they don't want to be transparent. You've been very, very transparent. And Cynthia, we feel you 1000%, and you get your official sister badge today. Okay. This has been fantastic. It truly has been fantastic. And, we have a lot of work to do, but we're willing to get the work done. We really are.
All right.
Thank you so much for the invitation. It's been a pleasure.
Yeah,
Thank you,
for joining
Betty.
us today.
We've
Thank
included you in the community briefing family.
Mhm,
So
mhm.
thank you for
Come back.
for sharing.
Be a fly on the wall and check us out. So for sure.
Awesome. We want to thank you guys. We went over a little bit and we do respect your time, but this was just too good to just cut it off. And Cynthia, I'll be reaching out to you. Miss Sharon, Happy New Year. And yes, let's all talk about a summit where we're actually having a little longer, couple of hours to talk about this is an important subject in our community. We want to thank you guys all for coming out. Please, I will edit the video and it will be on YouTube so you can catch it again, and the contents of the chat will also be in the comments on the YouTube. So share it with all your other people, and we want to thank you guys. And next time we will be back here at 11 a.m. on, I believe that is February 1st? Good Lord of mercy. I think it is. No, it's the second.
Second, yeah. I don't know who we have on the second. I know February 9 we have Edward Simon with the California American Water, and then but I don't know who we have next week.
Next week I think we're working on Yolande from the National Children and Parent. Our pastor is not going to be able to make it, so I'm going to make a phone call and see if we can lock in Yolanda to kick off our Black History Month for the community briefing. So you guys come back, tell a friend, go over to our YouTube channel and please subscribe. Betty, you've been awesome. Come back anytime. Anytime. And all of you that have contributed to the conversation today, we welcome you. And if you guys go over to our YouTube channel, Michael's presentation that he did about 3 weeks ago, which was just powerful, please check it out. He was just awesome. He's a brother with a mission, and it's to make housing in our community more affordable and attainable. And he needs our support. So please check it out so you'll know, see what he's doing. And I mean, some information that I didn't even know existed in Los Angeles. He really, really took it there. So thank you all. And we'll see you guys next week. Bye-bye.
Hasta la
Take
vista.
care. See you soon.
Thank you.